Like we were supposed to be open on the 15th for our new office, and we can't even do that yet.
Where'd you guys move to?
Springfield. We're opening up an office in Springfield.
Nice. Okay, I think we're live. You see us, Ian?
Let me take a look. We are live. You're good. Yep. Good to
Awesome. Go. Okay. All right, hey everyone. Welcome to another week, week 3 of the market expert opinions. I guess we didn't expect it to last this long 2 weeks ago, but here we are. We're going to keep going as long as we're all quarantined. We're going to keep giving you the info. So today we got Matt Victoria. Many of you have seen him. He is always at a local real estate event, going out, saying hi to everyone. He's awesome resource to have here. He's going to give us the frontline perspective of what's going on with non-QM loans, FHA loans, everything, all of that. So Matt, if you want to give us a little more info about what you do and what perspective you're going to be giving everyone here today, and we'll dive in.
Sure. Thanks for having me on, guys. I appreciate it. The more information we can be out there giving people, the better, especially with what's going on in the market. People have been, the buzzword lately has been deferment or forbearance right now. So it's causing a lot of turmoil in the industry, and it starts from one place and then trickles down somewhere else. So what we do affects what your people are doing. Mm-hmm. Because if, like, I had an investor that had somebody that couldn't get a loan and sent them over to me, and it's like, these are all the problems that are getting caused right now for people because they don't really know what's going on, right? So the buzzword right now, by the way, I do FHA, VA, a lot of non-QM stuff, which right now is also on hold. So we can get into some of these things because it's just, it's been a little traumatic for everybody. But in my opinion, I think everything's going to get better. It's not like, a lot of people are saying, oh, I'm waiting for the market to crash. I want to buy my cheap houses. And I don't think this is 2008. This is a viral thing, which is just causing a little bump in the economy. This isn't like where they were overpricing houses back in 08 and lending 125% on value of houses and things like that. So they put a lot of things into place to protect themselves. And now you're going to see even more because they just came out with an FHA letter on Friday night last week. And they've just changed a lot of the guidelines. So we used to be able to go down to a 550 FICO score. You're not seeing that right now. I don't know if you heard any of these things from any of your people that are on the.
I mean, all on Facebook, right? Everything's like one person says, it's 620, another person says it's 680. So a source of truth is impossible to find these days. But I mean, that's why we're doing this, right? To try to give people some sort of source of truth. But even still, we just had Matt Marinoff on. I like the term you used. Everything here is allegedly, right? So it's the best you can give right now. It's kind of crazy.
It is. A lot of lenders are different. So that's why one of the reasons why you're hearing so many different things. FHA doesn't really have a standard, so to speak. It's the lenders that actually put their standard on. So one person might be able to do a 550, one person might be 580, one person might be 500. It's because of the different lender standards and the investors that they have. Are they direct to Fannie, Freddie, and Ginnie? Are they merely just a correspondent lender, which is borrowing on the warehouse line and then, having another lender selling it or underwriting it? So the bigger companies, I think you're going to see have a better chance of getting through all of this because they're going to have margin calls and different things like that. So the company I used to work for, Primary Residential, they're at a 680 right now, FICO score. Movement Mortgage is at a 640 right now. Fairway, I believe, is at a 660 right now. We're still going down to a 620, but now below a 660, they want to see reserves. So what does that mean? They want to see two to 3 months left over when we close. So for somebody that doesn't have a lot of money, that makes it a little harder.
If you have the 620 credit.
Yes.
Right. Yeah. I mean, that's the same message for us. Your credit's bad, you're going to need more cash. That's the only counter to it right now. Yeah.
Well, plus a lot of those people that did wind up closing that have 580 FICO scores, you know, they're one flat tire away from possibly having a bankruptcy or something like that,
Right.
because they weren't very good at managing their money to begin with. That's the hard part, you know? So these are some of the things that are affecting us right now, which is in turn is affecting other people, because what happens is everybody's now is talking about forbearance. So it's an interesting word, because the question is, what does it mean? Well, some of us don't even know what that means yet for people. Because a lot of people are like, oh, you know what, Corona, I don't have to pay my mortgage. Let me go get a forbearance and let me get a mortgage vacation now for 6 months, right? But what that means is we don't know yet, because all HUD said was that you have to issue a forbearance. They didn't actually put a guideline in place for how that forbearance gets taken care of yet.
Can you dive into that a little bit more? I mean, what are some false expectations?
I think Matt had a really good point like a week ago. He was like, hey, you know, if you get a 90-day forbearance, but you're already in default, and then you miss your next payment, are you now 120 days overdue, or are you now 30 days overdue? Like, what's the answer to that question? Somebody's got to know that answer. That's a big difference in our world, in all of our worlds, in terms of you're 120 later versus 30 late. So like, I don't know if they thought that through or what.
Well, HUD's letter stated, they just came out with another one on Tuesday night, which stated that you're allowed to get a forbearance. If you are already behind on your mortgage as of March 1st, you cannot get a forbearance. So they already said that to us. And then they said that it's 6 months you're allowed to get, and then you could possibly get an extension of another 6 months, right? So what does that mean? Well, they're kind of leaving it up to the lender, because HUD didn't say how the forbearance had to get repaid. So what we're thinking or speculating is that they're going to come and say, okay, you have 6 months. Well, now what we're going to do is we're going to take that 6 months and we're going to spread it out over your next 6 months of mortgage payments. So if your mortgage payment is $2,000, that's now what, $12,000? So split that up over 6 months. A lot of people aren't going to be able to afford that. So what we're telling everybody, if you see all the mortgage people are putting up, pay your mortgage, pay your mortgage, pay your mortgage. Well, there's a reason why, because nobody knows what's going to happen with this. Because now if they tell you that you have to make whole in 6 months, then you're going to have a bigger problem. The other problem that you're going to have is that they are not allowed to negatively reflect this on your credit report if you're in a forbearance. So what's going to happen is, let's say that you are at a 5% interest rate. And now all of a sudden rates come back down, because right now they're high because of the pullback in the servicing industry, because they're already bracing for this forbearance and people not paying their mortgages. That's the reason why the pricing has gotten so awful on loans.
Yeah, we were like 3%, even under 3% 3 weeks ago, and just overnight we're right back to 5%.
Boom. If you can even get a loan right now, because there's actually people that are asking questions. Hey, are you guys still lending right now? Are you guys still lending right now? So for us, the answer is yes. We are still lending right now. Some people are not. Some people actually, one of the big companies actually put a hold on their fundings until April 15th.
Wow.
So if you can get a loan right now.
I mean, that's going to extend for sure with what's going on, but yeah, okay.
So let's say you do a forbearance. This is the one thing that we do know, is that let's say you have a higher interest rate, or you want to do a cash out refinance, which right now, if you have money, money equity in your house, you should pull it out right now to use it for something, whether it's to float or whatever. But if you're in a forbearance and you want to go and do a refinance, you can't until you catch your mortgage back up again. And that's something that a lot of people don't know.
Okay. So if you agree to the forbearance, you go into it, you're locked out of any type of refi right now. Okay. So I could refi then go into forbearance if I wanted to. Is that?
You could, but then it still becomes a bad thing for people.
Yeah. I mean, I think the big phrase that needs to be communicated very clearly is forbearance is not forgiveness, right?
Right. Forbearance is not mortgage holiday.
Not mortgage holiday. Yeah. Yo, pay your mortgage. I mean, you're going to be in a world of hurt if you don't right now.
Yeah, because we just don't know what's going to happen yet.
Mm-hmm.
And that's the thing that kind of is a little scary, because it's like, well, what if they come back and say, because now what's going to happen is when you take an FHA loan out, there's two insurances that you pay on an FHA loan too. There's an upfront mortgage insurance premium, which is 1.75%. So one of the things that people don't get is, like, when they're doing an FHA loan, it's actually really your loan to value actually is 97.75%. And it gets confusing for people on a CD when they say this other HUD premium of 1.75%. They're like, how come my loan balance is this? That actually goes into HUD as an account to pay for short foreclosures. So the other premium that you pay is a monthly. So now the lenders or servicers are entitled to put in a partial claim to HUD. So HUD's going to have to start paying out a lot of this money.
Hmm.
Yeah. So that's why it's getting real wacky for us.
I mean, it's, you know, it's, you know what it is you got a bunch of people in front of, or this is my opinion, is you have a bunch of people that are telling everybody what to do with their money in terms of like politics right now. And the reality is they don't know. And the problem is they want to pretend they know. They want to say this is the answer to the problems, right? Instill confidence in everybody, but they have no idea, and they haven't thought, like, these are the ground level questions that we are asking from where we sit, saying, hey, that doesn't make sense, that doesn't make sense. And then the guidelines change on a Friday and they change on a Thursday. So quite frankly, like, everything we're speculating right now could be a world different in 1 week from now, because they try to think of something else. There's such a massive amount of money that's been deployed for this thing, or supposedly been deployed, and then, you know, a huge disconnect for the logistics of how it actually works and is supposed to transpire into the streets and materialize for everybody, that, like, nobody knows what's going on right now. You're just leading with like a few days ahead of you and some speculation, right? I mean, that's what it is right now. There's no confidence.
No, well, they needed to do something, but like you said, they deployed it, but some of the mechanisms weren't exactly there. And if you hear everything else that's going on, they threw in a lot of junk, you know, like for the Kennedy Center and a lot of these other types of things. And it's like, well, wait a minute, where's the money really going? Like, now Trump is talking about putting together a second stimulus package to help the infrastructure.
Right, which should have been the first package, but you know, I saw that Kennedy thing. There's another one in there too, and I'm like, I think it was like a total of $60 million and somebody getting their pocket greased, you know, between like, I needed to vote for this or I needed to vote for that. It was obviously total bullshit in terms of, you know, that money being spent. But then I was like, you know, they're probably divvying up about 200 million or so towards, of the trillions, towards that actual check that goes to like the, you know, supposedly go to the individual citizens. I was like, that is like 25% to the Kennedy Center. Like, people could have made 25% more, but somebody had to have their pockets greased. I'm like, this is a mess in terms of like what's happening to get this done. It really is. Like, that's crazy. 25% more, 50 or 60 million dollars because you needed somebody's vote. Like, I can only imagine what else is buried inside that thing.
I don't even know how many pages is it, like 220 pages or something like that.
Oh, and there's probably like little fine print that everybody, like, you know, that today I think Trump's, and I'm not going to get into the politics of it, but I just read like an article, like Trump put his attorney on it to oversee the funds and distribution of the funds. And I'm like, holy cow, like, this is just going to get off the charts. Like, it's going to just escalate into, I mean, there was the other thing too, which was the way the checks are being dispersed, that some people might not receive a check from the government for 20 weeks so 20 weeks is August. So some people aren't going to get their stimulus check till August, which, if we're, you know, like, what, like, the whole point of it is we got to get it today. Like, that's the point. But, you know, that delay is crazy. So now we have the logistics stimulus, which is going to be all that's going to end up being, in my opinion, is like, okay, we've got $2 trillion. Now let's make all these crazy organizations, and, oh, you need 100 million in funding, boom, you get it, you know. And this is how the government goes backwards in making a mess. And then you have fraud and laundering and all these other things. You're gonna have people getting investigated for this because they allocated $100 million towards, you know, it's going to just be I don't like it, man. I don't like the stimulus package is the answer. I don't.
Well, what they need to do, the next part of this needs to help the servicers, because I actually never even really understood it. And the company that I work for, they're national, they're very well funded, and they're actually increasing their warehouse lines because they're getting ready for a boom coming in about 60 to 90 days. So I kind of see that happening too, because people are not really buying houses just quite as freely as they were 60 days ago. So what I think is going to happen is you've got a limited inventory to begin with, right? So now you have these people that are scared to go out and look at houses. So what do you think is going to happen in 60 days? So I think it's going to be an interesting market coming up in the next 3 to 6 months for what's going on. But what I didn't realize was that the servicer company, because servicing is a different business than lending, right? Originating a mortgage, FHA conventional, is different than the actual servicing of the loan. They're two separate businesses. Not a lot of lenders actually service. So the servicers apparently still have to pay the lender for the money, for the loan that they have. But what happens is the people aren't making the payment to the servicer. So how's the servicer pay the lender for the money for the loan if they don't have the money coming in from borrowers? That's where the big bottleneck is right now. It's the big issue.
Yeah, we do in-house servicing, so we're very familiar with like the, how they work together. So it's really like two different businesses. Like it sounds like it's all the same, but it's really like two different industries in its own right. It just made sense to have that together in-house for us. But certainly like those are also legit, like you said, like logistic questions that are going to become a mess in the stimulus package. And 60 to 90 days would be great. I just saw a really accurate, the most accurate article I've read on when the quarantine restrictions should be lifted, and they based it, like, it was a really detailed article on, like, I forget what city it was, but it was a Chinese city that was like, from this date forward, this is when the restrictions were lifted, and this is where our trajectory is. And everything was outlined really, really well. And it said, if everything goes the way it's supposed to go, based on this model, it's really going to be like late May, early June is when the restrictions should start to be lifted. But that doesn't also necessarily just mean like it's gone, right? There's a rebound consideration. You lift restrictions in the middle of June the wrong way or too quickly, every bar in the country is going to have a congregation of people. Like it would be insane as to like, it'll be a vacation in a vacation for people. And then all of a sudden you're going to go, those like 100 people that still had the coronavirus or whatever it is just flooded into bars, and now you have a rebound effect. So like, I also think the thing they have to consider for the rebound in the market, because we all want that, I'd love to know in 60 days from now, it's going to have to be like, okay, this is allowed. But if you just pull the reins off, we'll be right back in this seat come August or September. And it'll be, this could take some time, like some real time to open the economy back up. I was telling Ryan yesterday, and our exposure isn't big enough for this to become much of an issue, but there was an article recently in China yesterday that their government released a notice about like a concern for food supply. And you're like, well, what does that have to do with what's going on? Well, the things that we don't think about right now for a shutdown are like this, which is kind of nuts to think of. And this could come down the line, is you have, I forget what it was, 280 million like pounds of grain or whatever it is. This is what they store, and then they reproduce that and fill out. But their food lines have been, they haven't been able to produce grain during this time, which was like a 25% shortage. Well, 25% shortage of no production leads to literally like, they may put out something to say you should have 3 to 6 months of food in storage, and that freaked everybody out. Right now, my understanding is just like there was like they were trying to send masks everywhere. There's a huge underlying a lot of chaos for food right now. Which imagine that in like 3 months, we're like, hey, the quarantine's off, but there's no food. Like it destroyed the food distribution. That's a whole nother 6 or 8 months of chaos that could cause. Wild things I think are still to come.
Well, it's kind of like the toilet paper. I was reading an article and they were talking about the toilet paper. It's like, well, why is there no toilet paper? Because they think everybody's hoarding it. Well, the interesting article was that actually now, since everybody's working from home, that the usage went up. But the problem is that they only have a certain amount of production, so they can't keep up with the production of what's necessary. So this is affecting so many different levels of our economy and our life that it's not just any one thing, So it's like we're trying to put all these things together, and then we're trying to speculate and say, all right, well, what's going to happen? We don't really know, because this is kind of unprecedented. Nobody thought that their kids were going to have to be homeschooled right now. So it's like now the parents are home with the kids, So now you need to go out and buy more food, but there's only a certain amount of production. But now you got people that are quarantined because of the virus. So now they can't go out and produce. And that's where it's like, it's got all these different levels. So it's
I mean,
it's
that's
big.
what makes it different than the '08 crash. The '08 crash was real estate and real estate, right? Like every conversation was only talked about real estate. But this is how is the toilet paper industry going to affect real estate? There is some indirect correlation there that everyone's speculating right now, right? And I think that's what we're saying is nobody knows. So prepare as best you can because we're all guessing. And hopefully we're out of it in 60 to 90 days. But honestly, there's just so many things that nobody knows yet how they correlate that it could be different in 60 to 90 days. So
Yeah, I put up a post yesterday, and it's, it said, if you do you know anyone that has coronavirus? And somebody was like, oh my God, I can't believe I see another one of these posts. And I'll be honest with you, it was extremely enlightening in the sense that this is bigger than a lot of people. Like everybody was poo-pooing this in the beginning, I think. Like, it's no big deal. It's not going to affect us. And
yeah,
like
like
that.
conspiracy. Like, does anybody know anybody? Because I don't know anyone who was affected by it. That was 2 weeks ago, maybe 3.
Yeah. And I said, honestly, more people should be putting up posts like this just to kind of drive it home. Like you're seeing, like there was a house party, I think 2 weeks ago that they broke up in Mercer County in Ewing. They had 50 people crammed in a single bedroom apartment with a freaking DJ. And it's like, if we can get more people to understand, I'm going off topic of even mortgage and real estate, but if more people would actually do what they're asking them to do, then we can actually flatten the curve and get back to our lives faster. But everybody is so against saying, like somebody said to a cop, called him, like said it's like Nazi Germany, but it's like, listen, if you would just do what they're asking you to do, then we can all just go back to life.
Yeah, I mean, I think it's tricky for everyone, including our authorities, right? I mean, they do want this to end and they want it to be safe, but you also try to protect constitutional rights. Like it is so gray in terms of what we're supposed to do as a society. I mean, I personally have been in my apartment for 3 weeks, so I think I'm doing my part, but I also understand, you can't lock down and just lock everyone away, or maybe you can. I don't know. I don't know what the answer is. Nobody does.
Well, I think it'll find its natural course, right? It's just like it's almost like an open free market of virus, right? So the virus is going to say like, okay, if you're not going to lock down and everybody thinks it's like not real, I'm going to push this and I'm going to give it to enough people and kill enough people that you're going to know somebody and you're going to go, holy shit, I'm not going to this party again. So it's going to like find its like natural, like, it's like the capitalism of like a virus, right? It's like, I'll find the balance in this market because either they're going to respect what we're doing here in terms of staying inside, or I'm going to give it to your mom, your dad, your aunt, your uncle. And, you're going to go, okay, this thing's real. So, ideally we'd all just sit inside and just be done with this thing. But I think they said this week and next week are hell weeks on the trajectory, right? Did anybody else see that? I don't know
if you compare it to like Italy or China, that kind of thing.
Yeah. So this week
hopefully
and next week
is the peak. Yes.
Yeah. So we're about to enter our, but like in that process is when you see, I don't know if you guys have like looked just in the last 24 hours, like I've been seeing news feeds with like this person died, this person died, this person died. Like that's the most I've seen. And that's apparently we're going to be seeing that for the next like 2 weeks of like people that are in critical condition and stuff. And so I'm pretty sure those house parties will be really regretting that. Yeah. And I don't mean it like I hope nobody got it there, but they will probably not be house partying hopefully over the next 2 weeks.
Another part of it for people too is it's a religious thing, not to point anybody out in particular, but have you noticed the numbers that in Lakewood spiking up because of all the weddings and things like that? Because they just, they think that God will take care of them. And honestly, what I tell people is God might take care of you, but God might not take care of the person you give it to. And that's what people are forgetting. Like, Sean, I don't know if you know Sean, Sean, both of his parents are in the hospital.
Sean, yeah. Mm-hmm.
Yeah. Both of his parents are in the hospital right now.
And that's the scary age when it's 60 plus right now. I mean, we have an aunt in the hospital right now who's not doing well, not with the coronavirus, but there's no visitors allowed. Yeah. And at first we were upset by that, because we want to see her. This could potentially be her last moments. But But at the same time, we got to respect, like, gosh, if we gave her coronavirus, that's it, it's over. And then if we gave anybody else in that hospital, it's over for them too. So it's scary.
So somebody asked an interesting question, and they said, does this forbearance apply to hard money loans since they're recorded as a mortgage? Is any of that trickling over with you guys, or are you guys still taking the payments?
Nah. I mean, we're keeping an eye on like the guidelines, but there's no, I mean, because it's such a different beast of like an owner occupied versus commercial investment property. I mean, we're talking to people, and we're very much in tune with the servicing end of it to see. But like, our industry hasn't come out and said anything. Like, the government hasn't offered the commercial or investment industry any type of consideration for like, we're going to back up your loans or anything like that. So like, I know from the A paper, the stuff you guys do, that's obviously in conversation. So if forbearance is possible, it's there. These banks aren't letting people miss their mortgages or letting them, forbearance of their mortgages because they're nice people. They're doing it because they're anticipating the government is going to reimburse their situation, which is where that money should, supposedly going. The commercial and private industry the government has not offered anything in that capacity that I'm aware of. And even though we're a big, presence in terms of like maybe social media, the whole private industry, the whole non-QM industry is very small compared to the owner occupied industry. It's a speck of dust. Where we do let's say our whole industry does $1 billion a month or something. You guys, the A paper is doing 10, 100 times that in a month or whatever it may be. So I don't anticipate the government doing anything in our favor to do that. So unfortunately, if they do, we're going to pass it on to our investors immediately and say, hey, this is what's going on. This is what the government's offering. But at the moment, they haven't. I don't think we're even on the radar.
Now, are you guys eligible for any of the assistance that's been out there for?
I mean,
the
basic one. Yeah, the basic one probably, like you get that 10 grand from the SBA or something, but everybody's like, is it happening? Are we getting it? So, I mean, there's nothing like of substance yet, that we've heard of, we're a big enough company where that would be the case, but we're not waiting on the government. Like we're good in terms of like running the way we run without that, because we're definitely not basing our future on that about to happen or not happen. So, but I guess technically we're, possible for it. But again, that's just another, maybe this works, maybe it doesn't scenario.
So a lot of people don't know, I guess, how hard money wound up coming about was that when they changed a lot of the guidelines and the laws back in 2008 and 2011, they stated that, 2 to 4 units are not eligible for renovation financing if they're investor properties, and they have certain conditions that they want to buy properties for. So that's the reason why hard money kind of came about, to fill that gap. The non-QM stuff for us, which is your LLC loans, the taking out for you guys, the ITIN loans, one day out of foreclosure, short sale, or bankruptcy, or the bank statement loans, right now, they're don't know what the hell's going on, because they're securitized by Wall Street, which is what we were talking about before with some of the other hard money lenders. Like, I've seen a bunch of different posts saying, my hard money lender is not funding my loan. What do I do? So I guess there's still a few of you guys left.
Oh man, I mean, literally in the mornings, it's become part of my routine. It's answering that question to let people, like, all over the message boards and everything. I'm like, holy cow. I mean, I've received those, anybody know any hard money lender messages in the past? But now it is like, is anybody alive? Like, it's constantly every day. And I'm like, we're alive. We're operating 100%. Like, it's, and it's one of those things that I don't mind the competition when we had it. Like, it's fine. We were doing business. They were doing business, so I don't like to kick anybody while they're down. And I was saying this on my last one too. I was like, but I'm also not, I'm going to double and triple my efforts to expose that we're still in business. So I feel for the guys that I've had businesses before that have tough spurts, in terms of prior to hard money lending. So I get what it's like to be in that. I don't wish that upon anybody. I can say though, that during those times, that coming out of that, I believe that you learn the most about building a business that you'll ever learn. And then either you come back into the industry or a different one with that information at hand. But at the moment, yeah, I mean, we're one of the only guys in town. So we're pushing that in terms of making sure everybody at least knows that and puts stuff in front of us to analyze. So it's a little bit, yeah.
I mean, just to explain it, why we're the only guys in town is because we're privately funded. Because a lot of that's always the second question of why you guys? Why are you allowed to fund, right? So it's because we're privately funded. So our lines weren't pulled when the market went haywire here, which is what happened to the other lenders. And that's why we're still able to be alive and active here. So we're not as aggressive as we were 3 weeks ago. We're not going to shortchange that. But we're still here. We're still able to help keep people's businesses going right now. So
I think one of the, like I said, the biggest issues right now is the issue for the investors that are out there that are flipping the house to sell. What they need to do right now is to make sure that their realtors are double checking the pre-approvals or the loans that are in process. Because for loans that were not locked yet, all of these new guidelines are now in place for the loans that are in process if they're not locked. So now with reserve requirements, here's another one too, is that if you're self-employed and you don't have 6 months of reserves, they're now not going to use 100% of your income. They're going to only use 75% of your income, which could be a lot for people because that could be a significant amount of money.
Specifically for like an owner-occupied purchase or something? Is that what you're saying?
Owner-occupied. If you're buying an investment property and your income is derived from rental properties, they want to see reserves on that too. And just to show you how everybody's different, I know a lot of loan officers from across the country. So somebody from another big lender said that they're actually requiring 12 months of reserves as a business owner to be able to use their business income.
Yeah, I think I know the lender or maybe the lender you're talking about. I had a guy come to me and he goes, yeah, we need 12 months. And then he wanted me to post another 6 months. I'm like, 18 months of reserves? I'm like, like if we are 18 months deep into this, like we're not using the dollar anymore. So you probably lost that at like 8 months in. So but that's where they are. It is, I mean, they're trying to keep the doors open. People are trying to keep the doors open and trying to find a creative way to do it. And, it's coming back to the old school lending principles, like the no money down stuff and the stuff that you're doing, bringing that little cash to the table. That's fundamentally lending is not about that. Fundamentally, you have to show that you can perform. You're an individual that has the liquidity in case there's a rainy day. And when that's not the case, like old school hard money lending is like, this is how it was done. Like guys come to us now and say, oh, there's so much cash to close in a deal or something like that. I'm like, yeah, it's always kind of been like that with us. Like we were never the 5% down or 10% down scenario, because when this moment happens, our doors have to stay open. And, it's tempting along the way, right? You've probably seen some products along the way that you're like, this is ridiculous that this is even out here. And I can't believe they're giving this to people. This person's not going to afford that. That guy can't afford that. When this moment, they can until now. And then you run into this.
Well, you get some people that are, like I said before, they're one flat tire away from a bankruptcy. When you have somebody that's a 580 FICO score and there's 3 borrowers on the loan, and then they're taking a gift for the down payment and the closing costs, where's their money actually really? So when they can't pay, like they say you should have reserves, what is it? I think 3 to 6 months should be an emergency funds for people. Where's their emergency funds? Somebody goes on furlough now and they can't work. Unemployment only gives you, up to what, $675 a week, I think. Well, what if you're making a lot more than that? What's $675 a week really going to do for you? So yeah, the down payment assistance programs right now too. Nobody wants them right now. So because they're usually the first ones to default.
Yeah, I mean, but basically you have, honestly, it's part of a cycle. Now, we didn't know it was going to be the virus that's going to obviously do this, but like Wall Street's coming to collect their bets. They said we put a little bit too much. They do this every 10 years, right? They put their money out there and they let people that should have money, should not have the money, have money. And they go, there's a little bit too much out there. Let's pull the reins back in. I mean, 2008, exact same thing happened. 10 years before that, 12 years before that. So like whatever you insert word virus, insert word mortgage default, insert word 9/11, whatever you want to insert there, the same cycle has to occur, which is too much money on the streets, pull our money back. And we'll see another one in 10 years from now or 12 years from now. It'll happen again, or shorter, depending. But yeah,
Well, some of it kind of becomes a cleansing cycle. Like I said, and you'll see it in your side of the business too. People that were underfunded or, that weren't capitalized the right way, and they're kind of just running on fumes. They're going to be the ones that are going to wind up. It's going to be a weeding out process. We get this every so often where you've got these people that just don't have the right capital and to be able to make it through this. That's not a bad thing sometimes. Same thing with a lot of the realtors out there. This right now has changed the way that realtors are doing business, as well as a lot of us too, with digital and video and things like that. So it's definitely going to be interesting to see how everything moves forward. Is this going to become a new norm for us?
I mean, for sure, at some levels. I mean, I was just thinking, we have another brother in San Diego. Now, if he ever wants to move over here, so we're always hassling him to get him to come back. It's going to be standard practice for him to be like, yeah, just give us a virtual tour, right? Like, that's awesome. Like, international and, across the country, real estate has just become a new thing. Like, there's going to be so many new opportunities here, not just for realtors. Every industry is going to have their new thing that sticks forever from this. That's going to accelerate business. So,
well, let's think about this for a second, right? You're a lender. Do you really want, like, what was your credit score that you guys had before? What was your minimum credit score that you guys were looking at? Like a 620?
There's no minimum.
No minimum.
Yeah, there's no minimum, but if I'm going to push my risk threshold will be at its highest at 620 plus, 620 under, and you're going to be offsetting me with a lot of cash.
Right. So 3 weeks ago, what would you look at as a credit score?
We haven't changed. We've always been super conservative. If you want to ask me about my competitors, are probably like they were in the like 580. They would easily look at like 575 or something like that, and be at their max level of exposure of like 10% down or 5% down. So our levels really haven't changed that much in consideration, but I do know exactly where you're going with the statement, so you can finish. Yeah.
So moving forward, do you think they're still going to want to take 580s? Probably not, because they're not going to have to anymore. So the interesting thing is going to be what becomes the new norm for people. Because now
until they forget about this again, right? Like in another 5 years, they'll loosen it up again. But yeah, you're correct. It's the same. It's the cycle, right?
Yeah. I think the lowest credit score I ever did a loan for was a 550. And, the question is going to be in 60 days or 90 days, are they going to be revisiting 550s again? Mm-hmm. I don't know. It's an interesting question to see what's going to happen. Right now, what do? Well, we put people into credit repair. Hey, listen, save up a little bit of money. It's not the worst thing in the world to tell somebody, hey, maybe you might want to rent for another 6 months. Because we want to make sure that that you're not gonna have a problem as well. Like, that's the thing they don't get, is that it's for their protection as well. Because a lot of mortgage people won't actually go over payments with people and talk about what it actually looks like. They'll just say, hey, guess what? You're pre-approved for $400,000. Here you go out, shop, buy your house, and have a good day. Right? And then what happens? Well, they go under contract for the $400,000. And then 3 days later, they call their realtor and say, you know what? I don't want to buy this house because I just found out now that a $400,000 mortgage payment means $2,500 a month, and I can't afford that. So that's why I think it's gonna change the climate a little bit as to what the new norm is going to be. It's going to be interesting though to see how long it takes to settle back, because we all get comfortable. That's what happens. When it comes to lending, the government, they get really super conservative, and then they start backing down. There's never really a happy medium. So we actually have to kind of wait for that. But the interesting thing is going to see, are they going to back down, and how long it's going to take now.
Yeah, that's the wait and see thing here. The 60 to 90 day. I mean, it's wild how much this conversation has changed in literally 3 weeks, because we were saying, let's see where we are at the end of March. Let's see where we are at the end of April. And now we're already saying, no, we're going to see the impacts in June, July, August. And that's earliest at this point. Right. So
there's quite a few hard money lenders, like I said, that are not doing loans right now. You guys, your niche is a little different, because you can, not everybody can, like, what's normal for a hard money lender? Like 2 weeks? Is that about normal for
most, I mean, like prior to this whole thing happening, yeah, the 2 to 3 weeks is pretty common, is what our competition would be doing. Yeah.
Right. So you guys are 24 to 48 hours.
Mm-hmm.
So your niche is a little different. So it's like, anytime I've talked to people like, yeah, but they're expensive. Yeah, but how quickly do you need the money? If you need the money in 2 days, well, it is what it is. You get what you pay for.
Yep.
Yeah, expensive becomes a new relative term to those people that you've had that conversation with too, because we were in the business of like, old school hard money lending isn't 6-in-1 type money. I see we had guys getting 6-in-1, 7-in-1 because historical rates were so low that the spreads when you deploy that capital made sense at 6 and 7-in-1. And like, we're much more expensive than that, like a traditional lender. And we're like, we're not doing that because there's no money in the business of 6-in-1, 7-in-1, and it makes no sense. So we got the reputation, I guess, of being more expensive than most people. But like that 6-in-1, 7-in-1 type money, I don't think we'll ever see again in our lifetime. It was a very unique time in terms of the money being so low and that many hard money lenders being in business and able to deploy. I don't think people will ever get their hands on that again. So the norm, or it won't be expensive anymore. It'll just be, this is how much hard money costs, because all the traditional lenders are at that number. Traditional hard money lenders are at our rate or higher. People just got very used to this Wall Street flux of money that's gone. That in 6 months from now, people won't even remember they'll remember when they got 6-in-1 money. They ain't going to get that again.
How many of them are going to be left standing is going to become the question.
A lot of them won't. A lot of the newbies will be knocked out because they won't even be able to get in. A lot of your big guys that were doing a ton of volume on low liquidity, like you were talking about earlier, they'll be gone because, right now they're looking at a position where if properties aren't selling and they have 50 houses on the market, that's a nut they have to carry every month. Say, let's say it's $1,000 a property, 50 houses, $50,000 a month, where they're in that check from if they're coming in with 5% down. They're not. So those guys fall hard. So your guys that'll really survive this kind of move are going to be like your 1 to 10 flips a year type players, where they can afford like to carry something for 90 days and stuff like that. But your really big players get crushed, and your newbies just don't get in. So the bread and butter is your 10 or less flips a year, and above 2, under 10, and that's a sweet spot for surviving this for a lot of people in the business, in my opinion.
Now, how are you guys looking at dollar of the flip? Like, how are you guys looking at the $1 million+ project, or is that making a difference on the hard money business for flipping as well as the price points right now?
I mean, the comps are going to be what determines it, whether it's in the $2 million range, the $500,000 range, or $100,000 range. If you're in the $1 million+ range, I mean, we're probably going to make sure you're a little bit more liquid, right? We want to make sure you can, if coronavirus happens, right, that you'll be able to build through it. But it's basically the same. It's all just proportional for us, right? Whether you're in the 500 million or 100,000. So it's really, for us, it's pretty much the same. And that's the message that's going out, is we've been doing this from the beginning of our operations. For our competition, I'm sure it's very much changed. They probably won't even look at $1 million+ right now. So.
Well, because the buying cycle of $1 million buyer is different than the buying cycle of a $400,000 buyer.
It is, and inventory is different. The problem right now is we haven't seen the impact. Like, things haven't even recorded. Like, when you put out a mortgage right now and you're waiting on your appraiser, like right now you could still go on. Maybe they use the last 6 months or 3 months, but that number, I know in my head, it really realistically in 90 days from now is not the right number anymore. So for the first time in a decade, I remember this in 2008, when the market was crashing, I couldn't go outside of like 60 days for comps, but nothing's recorded really yet to show you like $1 million house coming down to $800,000. We haven't seen it yet. You still have to go off of what was selling pre-virus. So I do think that we're going to see an impact on the $1 million+ houses in terms of what you're saying, because it'll be, inventory will go up, pricing will come down. How much, we don't know, but at the moment, the only number you really have to go on besides speculation is the comp that you had 3 months pre-virus. That's really, there's some that probably starting to show up post-virus, but not really.
How about you? I mean, are you seeing any difference there in your millions and whatnot?
Not yet. Majority of what we do is below 750. So a lot of it is the first time home buyers. Unfortunately, I had somebody that was going to be closing, and he worked at the mall. So the malls are all closed. So now his closing couldn't happen.
Mm.
So this is what you're going to be seeing, because one of the changes that they made was that they're now doing a verification of employment the day prior to actual closing and funding. So they want to make sure that everybody's still working. And that was one of the really big ones that came like really quick. Like, we want to make sure they're still working.
How often are these coming in? Like, at once a week, you have a new, Bible to follow? Is that what's going on for how fast it's changing?
They send out a major change on Friday. Normally they do them like maybe once a month, but it's like they're changing them right now. Like, we had one Friday night, then we had another one on Monday that was effective from Friday. And it's like the company's trying to keep up with their changes too, because they may have changes from their investors that they're selling to, because it's a combination of direct to Fannie, Freddie, and Ginnie. And then also the warehouse lines that they're using, the warehouse lenders are actually saying, you know what? We don't like this anymore. So now we want this. So now that affected, and they call them overlays for lenders. So it affects the overlays that you're dealing with. Like now, Wells Fargo, they're not even doing any jumbo financing right now. Wells Fargo pulled all their jumbo financing back. So that now becomes a bigger problem for people. I can't even price a 203K right now, because that's another part of the industry that's kind of getting affected.
And even if you had one under contract, it's all being changed right now. Is that accurate for them?
As if it wasn't locked already, then yes. So that they sent out an email, I think on Monday night, and they said, or over the weekend, they said, send us a list of all of your loans that are in process, and if they're locked, if they're not locked, if they have reserves, what's the FICO score? Like, they're all looking at this on literally like in a case by case basis, because they funded like $100 million in loans last week, and they were worried about people calling up for forbearances this week.
Right.
It's that big of an issue for people, because what happens for us is in our business, there's two ways that we could wind up getting a chargeback, right? So one is called an EPO, or an early payoff, right? So if somebody refinances their house or sells their house within 6 months of us doing a mortgage, we have to give our commission back. So that's both us as a commission salesperson, because we are commissioned, even though we're W-2, and then also the company giving their money back too. So that's why that's one of the things they worry about. The other thing they worry about is a first payment default. So nobody knows how they're actually treating this yet, because it's so new. So they're worried about these forbearances becoming first payment defaults for lenders. Could you imagine if half of that $100 million in funding, they have to give commissions back on half of that, of $50 million? What do you think that would do to a company?
Stress test it fast.
Yeah, could be gone.
Yeah, because nobody's really addressed yet. I think out of the 18 investors that we have, only one of them so far has addressed it and said that they wouldn't do an early payment default, a first payment default. But it's like, that's the thing that's going to cripple lenders on this side. But they didn't address any of that yet with Congress.
No, I mean, everyone was fearful of April 1st, but I think it's May 1st that's going to be the first real wave. April 1st, people could dip into their savings. May 1st, some of those savings are just taken out. So it could be a very real scenario you were just walking us through there.
Yeah, and that's the scary part. And that's on the residential side of what happens is, like, do all of the loans that we did, are people going to go into forbearance, and what happens to us as an industry on our side, because what we do affects the real estate industry. If people can't sell their flips, or what do I have to now worry about if I'm going to wind up doing a mortgage for somebody? Is it going to be done for free? I'm not going to be able to pay my bills if that's
you're not working for free. Yeah.
I mean, you hope that in this new $1 billion stimulus logistics package, these are the things that they're considering, because this is this is what that money should go towards, or these kind of things. Like, this is exactly why they're supposed to be passing it, but I have a strong feeling it probably won't be addressed. I don't, but that's the walk down. Like this leads to this, leads to this. Just like when they did like when they initially announced like all businesses closed, and then they were like backing up. I mean, I think Cuomo, from what it appears on the internet and so forth, seems to be doing a very good job with what he's doing in New York. It appears to be taking action. So I'm not knocking. And he was very honest with like when they said, it was Cuomo that when they said like we're backing off all businesses are closed, and then somebody was like, well, what about this business attached to this business? And he was like, look, first thing is to save human lives. We're working through it day by day. And then you go, oh, they don't know. So they don't know either. He's doing his best. So this is the same thing that's going to occur in what you just said. Like, yeah, like cool, $2 trillion in stimulus package for logistics, but like, did you guys think of like the mortgage broker that does it like this and like this and like this? And it's like, you got to answer that question, or else where's that $2 trillion going towards? So those are the questions that are going to have to be answered. And who knows?
We'll see. Yeah.
Well, and then, you know, Trump said that he wanted to have the country reopened again by Easter, you know, and everybody's up in arms saying, oh my God, how can he do that? But you got to look at it this way. I mean, what's going to happen to all of these small businesses that can't be open right now too? It's a very fine line to walk. And it's I would hate to be him right now, because it's a hard position to be in. It's like, all right, well, is it the lives? Well, of course the lives matter. But then the question is that if people can't pay their bills, what now happens? How do people react to that? Like, you know, that's tough on people mentally.
Yeah,
not there's know where
there's no manual on this. You know, the last one we have is from 1918, right? And we're in a little bit of a different world since then. So I totally agree. I mean, whether you're Trump or any president on any country right now, like, it's tough. Whatever you do, you're going to get flack. And, you know, we're not going to know the answer was right or wrong, probably ever, right? Because if he does something and we find out it didn't go well, maybe it wasn't as bad as if he didn't do something. Like, you know, we're never going to know. But I guess time will tell.
I told my wife, I said, you're going to wind up, you know, she sees the numbers and she's like, oh my God. I'm like, hey, listen, I said, I'm going to tell you this now. I said, the numbers are going to get higher. I said, that's the only thing you can count on right now, is that the numbers are going to get higher. And part of the reason why, I believe, is that because they haven't had a lot of testing. And look at South Jersey, right? Yeah. They're just starting to get cases in South Jersey now, because why, right? Where did they start with the testing? They started in Bergen County and Middlesex County, right? Like, I live in Edison. And for a little while, Edison was actually like the #1 town in Middlesex County with corona cases. But now all of a sudden they have testing availability. So now what's happening? Now you're starting to see numbers. And you know what? You're going to wind up seeing a lot more in New Jersey. You may wind up seeing 100,000 in New Jersey.
Sure.
You know, out of 9 million, that's actually not a lot. But the problem is that the media is creating all of this fear and blowing it way out of proportion for people. And getting everybody scared.
And so people are watching too. So I say, do your part and turn the media off. Stop listening to it.
And do your part, right? Like, social distance, right? Like, we go out for a walk every day. We go out to the park. We go out to go food shopping if we need to. We stay away from people. I laugh when I see people 2 feet away from each other in the store.
Sure.
In line.
Why take that risk? Why do it? No, I got you, Matt. So Matt, we're actually out of time here, but I want to thank you for giving us all your insight here on what you do. Do you want to have any parting words for the audience here?
So lending is changing on a daily basis for us. So if you're having an issue, or even if you want a second opinion on what you have, like I did this for an investor, the lender that she had totally dropped the ball on it. She wound up sending them to me, and I told her, hey, these people can't buy. And she was a little pissed because it was 5 weeks into the process already. She's like, well, how come they didn't tell me? I'm like, I don't know, because they overlooked it. It was like a simple thing that they overlooked. So my advice is, if you're an investor and you want a second opinion on something that you have in process right now, let me know. If you're a realtor, revisit all of your pre-approvals that you have on your buyers right now to make sure that they can still even buy for right now. What do I think is going to happen? I think 30 to 60 days, a lot of this is going to calm down and it's going to relax. But the problem is, we have to look at right now. So if you have somebody under contract right now, you want to make sure that they're still able to buy and still able to get closed.
Matt, can you give us your contact info? And then if you can also post it on this Facebook when you're done, but just for people who are watching, if they can reach out to you.
Sure. You can find me on Facebook, Matt Your Mortgage Guy. 908-296-8904 is my phone number. I'm very easy to find on Facebook. And then Matt at mnmmortgageteam.com.
Perfect. Awesome. Thanks, Matt. Appreciate you coming on today. And hopefully that was helpful to everyone. So take care.
See you later, guys. Thanks.
Bye.